Hey traders, a quick morning video. Sorry, a little dark in here this morning. So basically what I'm doing, I'm keeping a close eye on these bonds. Next week we have the June FOMC rate decision. And things I'm looking at here, we are at market maker move, expected low for bonds already this week. We still got today and tomorrow to get through on the bond market. We had an unexpected rate hike in Australia, which is kind of rattling the markets here. So basically, uh, we're seeing an inflation uptick, obviously, in Australia, suggesting China might be facing the same headwinds. Okay, so things might be stronger than we otherwise thought. So this is putting pressure on our bond markets and yields. And inversely correlated to that is the high PE technology stocks. Okay, so let's keep this in mind going forward here. I got a very close eye on this, uh, looking that we might be going outside the expected market maker move this week here on the bonds to the downside, popping up yields going into next week. So definitely want to keep this one on watch going forward here. Okay. Now, slash NQ. What happened yesterday? We did see pretty significant. Let me see here. Go down here. I got the wrong time frame. We had a very significant breakdown in the NQs. This is an impulsive sell-off in the NQs that we saw yesterday. So, that is one of the first things we're looking for a bigger correction. Not saying that's going to be the case. I initially called out 14,250 as where we were going yesterday, 250 area. And basically, in the overnight session, we have managed to achieve that target. Then I revised it to 14,375, or it was 350. I can't remember. 1320, yeah, 375. Yeah, up here, 370, yeah, 375 area. And that was 2 weeks ago, the close. So that held initially yesterday, and then we right into the close we had trouble even holding that on the NQs. Okay, so the dark blue here, this represents the market maker move ranges for this week, and we are currently outside the market maker move for the current week on the NQs. So we do have an outside move to the downside technically right now going on here on NQs. The 20-minute, we are getting a little warning sign here. We might be uh, getting a little, our signal line is giving us a little bit of a warning sign on that. So keep that on watch here. So we want to make sure that our lower time frames, so we have a bearish cross, potential bearish cross here initially here on the NQs as well. So definitely, and we are outside the market maker move for the week. Below 2 week ago close. So a few things there we definitely got to, keep in mind here going forward. Some other things I'm looking at here. Uh, was it this one here? I think it was. If you go and draw, you see where you were coming up right here. If you put an fib extension right there, I like looking at these wedges, and we come right down to here. Okay. Okay. I do want to point out here we hit 100% of the expected move of this wedge breakdown right here. So a lot of people wouldn't have caught that. Okay. So I do want to point that out. We did hit already in the pre-market the measured expected move for the Nasdaq to the downside. So we just got to keep a really close eye on our short-term oscillators. I start with, it'll go down as low as 3 minute, and see if these oscillators, see like there, the 3 minute, our 3 minute is potentially giving us a bullish sign. And like I said, we have potentially hit the expected move to the downside. So, as these oscillators, as our signal lines improve, definitely I'm looking more to the bullish side. So definitely want to keep that on watch. Uh, See if there's some bullish setups here uh, in the markets. Okay, slash yes. Other things I'm looking at here. I don't know, 3 minute. Let's go back to 20 minute. There it is. Took me a minute there for it to load. Okay. So basically we came right down to this was the last week uh, trading range, and I got a trend line right there. We came right down, back tested it. So we held that trend line here on the S&P so far. So as far as I'm concerned, as long as we hold this trend line on the S&Ps, the upside trend is still intact. Okay, so my bias is slightly more to the bullish side by the dip, because this trend seems to have held so far. So definitely want to keep that on watching the S&Ps. The S&Ps didn't get hit nearly as bad as the Nasdaq yesterday. So definitely things I want to keep on watch here. We could just be chopping around sideways, for a bigger breakdown later in the week. I don't know, but the responsive so far what I'm seeing in the markets, it you know it's somewhat corrective, but we are seeing signs that impulsive warnings. You see, like this Apple, that's an impulsive down. Okay, whenever you start seeing big impulsive downs, that can give you an early warning sign that something's changed in the structure, the foundation structure in the market. See what happened to Microsoft yesterday? We got down below the 30-day regression line, and they came up, back tested it, and they just puked it. Okay, that's an impulsive sell-off. So, you definitely got to be mindful of this type of price action. Because what basically on the way up, we were seeing impulsive moves to the upside. We have hit the target from October, 4,300 SPX. We have achieved our target that was set way back in October. So, we have to be mindful that, things could get this is the beginning, the beginning salvo of a much bigger problem in the broader markets. So, this is a problem. Okay, and what's going on with the bonds suggests to me that Nasdaq is probably going to underperform the rest of the week. So, I don't know. We'll see, and we'll go from there. There was other ones too. See, these are your monsters of tech. Impulsive move down. Okay. These are warnings. Amazon, Google. Impulsive move down. Okay. Uh, these are your I can't remember if Meta's really not one of your monsters anymore. But yeah, but that was somewhat of an impulsive move down on Meta as well. So I do want to point out is, when you have the biggest market cap companies, with Apple, up until recently, was more valuable than the entire Russell 2000. Okay. And, when these things have impulsive moves to the downside, you got to pay attention. Okay. And so basically, what I'm looking at right now is I want to really keep a very close eye on these bonds. And with the surprise out of Australia, it suggests it's probably going to weigh on the bonds the rest of the week. So, um, but like I said, uh, the ES is right now, it's still corrective. What we've seen so far is still corrective on our S&Ps. So the problem is that we are outside the market maker move on the Nasdaq. So you have to be very mindful of that scenario. You know, uh, Whenever you get outside the market maker move, it causes a force covering situation from the market makers. Because now they're underwater. You know, they got a lot of gamma exposure. So further downside risk, they have to sell into that risk, which can cause a feedback loop. So be very mindful of that scenario. Okay, I'm gonna stop mumbling here, guys, and I will see you in the trading room. If I can figure out where the button's at.